Hey folks, welcome to Verified Investing. My name is Gareth Soloway, Chief Market Strategist here. In today's video, I want to analyze the chart of Robinhood, which has just had a major surge up as of yesterday because it was added to the S&P 500. In addition, we need to take a look at Palantir, another favorite of the retail crowd. What is the chart telling us the next big move is going to be? All right, delving into the chart of Robinhood, we can see there's your big 15% move from yesterday. Today, we are seeing a little bit of a pullback overall. Now, in general, and this is something very important, when a company gets added to the S&P 500, they tend to go up a little bit, but 15% is excessive. That usually does not happen. Now, the reason this happened is very, very interesting. Essentially, retail crowd has gotten very into zero-day options and weekly options. All right. So options that expire within the week or on Friday. And what they do, a lot of retail crowd ever since 2021, they've bought way out of the money calls. Now, remember, who's selling those call options? The institutions. And so when the institutions sell calls that are way out of the money, they take in a premium and they need to make sure that expires worthless, right? Now, what ends up happening, and we saw this in 2021 with GameStop, AMC, and some of these others, is that when the stock actually makes that move, the institution can get clobbered in terms of taking mega sized losses on these options. And so, how does the institution protect themselves? They buy the stock. So, when you have an over excess of people buying out of the money calls that are expiring either today or, let's say, at the end of the week, the institution by default has to cover themselves by buying the underlying stock. And that's where you get in these type of meme type stocks, these fan favorites, these very big moves on news that normally, if this was XYZ or ABC stock, it might have only been up 3 to 5% on the inclusion in the S&P, but Robinhood was up over 15%. Okay, going back to the chart, what we have here is what we call a double top. So again, we are into double top right here, and that again was tagged as of yesterday and today, and now we're seeing a little bit of a pullback. The biggest thing to me is not the double top, believe it or not. It's what we would look at as a parallel channel. And so if we take a look here, folks, and we can see again, there's an upsloping trend line, and we bring it up to this area here, what we can see is that Robinhood is now stuck between a parallel channel, right? So again, notice it hits the low end right across here, and then the high end here, here, and here. Now, what this tells me is that if Robinhood goes up from past signals, it gets rejected at the parallel. And so again, while Robinhood could go up a little bit more, we know that in general, we should expect a pullback off the $120 level if it gets that high. In addition, one other little tidbit here is that in general, once these weekly and daily options expire, institutions no longer need to hold the underlying stock. So if let's say people were buying the $120 calls on Robinhood, if on Friday we see Robinhood close well below 120, all of a sudden the institutions make all that money in premium, right, from selling those options, and they don't need to hold the underlying stock as a safety measure. And so then they dump that stock. And so interestingly enough, Friday afternoon or Monday, if Robinhood is not at or above 120, you may see a bigger sell-off on Robinhood. And again, it would be very interesting to see if Robinhood going into Friday goes up and tests this and then sees a bigger sell-off, let's say on Monday, to the downside. Now, the other thing I want to mention is upsloping parallel channels have about a 70% chance of breaking to the downside. And so in general, when you chop inside of a parallel channel that's upsloping, which is this one, it's ascending, in general, there's about a 70% chance, even if you bounce a few more times, that eventually you break to the downside. So just some little tidbits there. The idea here is that I would be more looking to short Robinhood in this vicinity, understanding that institutions, if Robinhood doesn't push over 120, would then end up covering or selling their stock. And again, ultimately looking for a bigger down move with a hit here, maybe a small bounce, and then an eventual break to the downside. Now, turning our attention to Palantir. Palantir had this great What would we call this, guys? All right. And this is such a good example of it. We usually look at this in the inverse chart, but what type of pattern is that? That's an upside down cup and handle, right? Here's your cup and here's your handle. And it would, another way of putting the term would be down move, inside bar consolidation, or a bear flag. Either way, the chart here on Palantir is a bearish chart looking at further downside, right? So again, analyzing this, we basically say this chart, even if it rallies up a little bit more, and I actually think it could go back to about 170 or so. This area right here is going to be resistance. It's also the high of this wide range red candle, but we'd be looking at this as a bearish setup to head lower. What would be a general target? Generally, I look at the former major pivot high. Notice big up move, big down move. That now becomes support, and that would be around $125. And so overall, we don't know when the bear flag will break down, but as long as it holds this general vicinity and stays basically, let's say it can go up as high as about 170. As long as it stays, let's say, at 170 or below, the bear flag remains maintained, and you would look for downside in Palantir in the coming weeks and months. All right. Again, the key here is verified investing. No BS, just charts. It is what it is. The charts don't lie. The charts are what they are. Price, pattern, and time. All my job is to translate that to probabilities and make trading decisions based off of it, which is what I've done in this video. Very simple, very straight to the point, which again is kind of a rarity these days on the internet. But again, no fluff. The chart is the chart. Remember that. Have a great rest of your day, guys. I'll talk to you soon. Take care.